Hey traders, Chris Pulver here with Market Traders Institute. Happy Monday, everybody. It is 10:30 on the 5th of August. This is a weekly outlook for the 5th through the 9th, taking a look at everything from futures to Forex to the stock market. Right now we're seeing a bit of a panic in the markets. It was a combination of things from last week. We had the ever important Fed meeting, and it was really summarized as a hawkish rate cut, which is kind of counterintuitive considering last December we had a dovish rate hike. But the Fed disappointed markets by saying this was more of a mid-cycle adjustment versus an easing cycle. The market didn't like that. This also was coming off of Brexit news over the weekend with Boris Johnson and plans to stay firm on a no-deal Brexit if needed. And the pound was crushed last week on Monday. It stayed weak all week. We had the Fed on Wednesday. Trump had a tweet heard around the world on Thursday with the U.S. raising tariffs once again to China by 10%, which brings it up. And I actually have a chart to show that right here. Take a look. Headline, this figure comes from Deutsche Bank. The S&P's big negative swings have had tariff story behind them. So January of 2018, we had first imposed tariffs, China, U.S. going back and forth with retaliatory tariffs. How'd the market react? There's the drop, retracement, drop again to the double bottom. The market decided to rally. That was a divergent rally. That was an empty rally. That was a bear trap rally. And then there's your 10% tariffs on another $200 billion in goods. And there was your sell-off going into October of 2018, pausing until the Fed rate decision in December. And that's what created the meltdown there. That was right around, it was like 19.5%, just shy of that perfect 20% mark. And we had the melt up starting on December 26th. There's your bottom and V bottom in the stock market. Rallies all the way up, a little bit of a dip, and rallies all the way up. Again, the melt up, the low volume rally, not much has been stopping this, but the way that I see this, and we talked about this literally all year in 2019, I said this structure is a broadening formation. So it is not a surprise that right now we are seeing the story of tariffs with really, the reality is this could go a long ways. I mean, we might come back down and score a point here. We did make lows. Worst case scenario is this creates a monster drop. Now from this area, although panic will be ensuing, it will be a buying opportunity most likely from the technical front. And I'm sure there's going to be plenty of dips to buy, but that is also a 30 to 40% drop in the stock market. For example, if we're currently trading at 3,000, which we were, down to 2,200, that would be an 800-point drop off of 3,000 highs. That's a 27% correction. Okay, now is it going to be an even 27%? That's the perfect dip to buy off of? I don't know. I mean, there could be a lot of things that are going into this. If the central banks aren't here to be the saviors and the backstop, and rest assured that everything's going to be fine, and we'll take it on the chin again like we did back in 2011 and 12. Stop the financial crisis in 2008. Again, we are seeing that there are mechanisms in place to keep chaos from happening, but at the same time, it's almost like this is needed. One thing we can say as traders is there is a lot of volatility. It did come out of nowhere. It is literally August 5th. This is so much volatility in a weird time during the season, but it doesn't matter. It is upon us. We are seeing a lot of volatility across the board. Pounds are moving a lot. Aussie pairs are moving a lot. The yen and the Swiss are super strong safe haven currency pairs at this time, and you're looking at steep drops, like I'm talking from a cliff. So we're going to take a look at the charts today, make sure that we are prepared. One thing I'll be doing is some of the trades that I'm in, and a lot of my planning is from long-term time frames. I'm planning on daily and weekly charts, and some of that structure is being breached as we talk and as we look through charts today. So I will be looking to manage some positions. I've got some positions that are nicely in profit. I've got others that I'm going to have to sit and nurse and work through. But what I'll probably do is as I'm making profits, if I've got positions I want to get out of, then I will be washing some of my profits away with bad trades. Or I should rephrase that and say that I'm washing away my losses with profits. So I actually don't really take any realized losses, or it's a net zero gain. But at the same time, I'm able to free up some of my margin and just focus on what is right in front of me, which right now seems to be a pretty big risk-off flavor. So let's take a look at the markets. Let's get into the live markets here. And again, this is a little bit for everybody. Here's the SPY right now. We have 1, 2, 3, 4 days. Now the market opened severely bearish today. You can take a look at marketwatch.com. Nice little dashboard. If you take a look at futures is dropping. We've got Dow Jones futures down 2%, S&P down 2%, and NASDAQ down almost 3%. It has been a steady drop to start off this Monday. U.S. market's been open for just over an hour. What's it doing? Gapping lower, significantly lower. There's a 2.25, almost 3% movement with that bearish gap and momentum to the downside. Is there a lot of room going to the downside? Certainly seems like it. Okay, what's going on? What's the blame? What's the catalyst? There has been a recognizable complacency in the market. The stock markets, the indices, the global economy has shrugged off a lot of things in the last 2 years especially to keep this fight going, to keep this rally going. That V-bottom from last year was crazy, right? We had new historical highs on really no positive data other than hopes that the U.S. and China would work out a trade deal. What's happening? It's not happening. It's still trade war concerns. It's slowing down the markets. We are in the peak of earnings season right now for the U.S. companies, and right now, if we stay on pace, we'll actually show a earnings recession, which hasn't happened since 2016. So while all this madness is saying that things are not good, what do we trade? There is a flight to safety. There is opportunity in short-term trading for yen pairs, for Swiss pairs. I am cautiously on the lookout for V-bottoms. I am cautiously on the lookout for any type of random tweet, any headline that does show some type of immediate promise on the U.S. and China, because that could certainly stop the bleeding right now, which I'm sure the market desperately wants. All right, but we're going to get into the Forex market specifically as all this is happening. You will notice with a currency strength chart, the Japanese yen and the Swiss franc are the strongest currency pairs. Let's take a look at that. Let me go ahead and refresh this to real time. So this is the Swiss on top. The euro is also on top. This is the yen. So you've got the euro, or I'm sorry, the Swiss franc right here. That's your strongest of the day. Your euro and your JPY. Your Aussie, your dollar, your CAD, and everything else are stuck. But your Aussie is the weakest. Your Swiss is the strongest. So JPY and Swiss, risk-off currency pairs, showing some strength today. That's what it looked like last year as well. Look at this open. Late last night, Asia session, first thing in the morning, boom. Swiss franc jumps. Aussie drops. New Zealand drops. Right at the Asian Open, right? That's your Tokyo session. That's right in the heart of the Asian Open. And risk off has been the flavor of the day so far. So it just looks we're picking up right where we left off last week. All right, so let's get into the currency pairs. There's your stock market. Let's go through our pairs. Aussie CAD. We are breaking through a major level here, 9,000. Now, I do have some buys in on the Aussie CAD. If you take a look at the daily chart very quickly, I did note that we have a lot of daily candles in a row, which for this currency pair does not happen very often. Yes, we've seen sell-offs on the Aussie CAD, right? Sell-off. This is 1, 2, 3, 4, 5, 6, 7, 8 days in a row, but it still retraced. This is now 1, 2, 3, 4, 5, 6, 7, 8, 9. This would be 10 days in a row. We are probably going to retrace. Okay, now for this particular currency pair, how big of a retracement? Well, from these lows, if we retrace, the safe level would be get yourself out around 90.50 to 9100 just to make sure. I mean, if we have a stronger bottom and something more optimistic coming in, that's great. But we need to close firmly back up of 9100 to show any promise that this thing wants to go higher. Right, so we are literally looking for the bottom of the year. Otherwise, any correction, any retracement, watch how it behaves. If it's a slow correction, this is most likely going to be what was support, which, by the way, was 3 or 4 years old. This is likely going to lead to more selling. And what I mean by support becoming resistance, take a look at the weekly chart. If I scroll this weekly chart or compress this weekly chart, look back here to all these lows. This goes back to 2013, 2015, 2018. That's 6 years of lows that are being broken right now. Okay? And it's not just a test. I mean, we're looking at 1, 2, 3 weeks now violating those lows around 9100. So do we have a pullback coming in this currency pair? Probably. But if we come back towards 9100, that past support can certainly become resistance for more long-term selling. This is a breakout opportunity. I have some positions that have built to the buy side based on the probabilities of a correction here, but the reality is once I get myself some net profits towards that 9,000 level or 90.50 or 9,100, I want to get out, clear those positions, and I'm going to be looking for sell opportunities and stops back above what was support to become resistance. That's Aussie CAD. Aussie Swiss to me is a little bit different. Okay, really the gauge I'm using for Swiss in general is the Euro Swiss. Now the Aussie Swiss weekly chart, we have some significant historical lows around 6,500. Now, perhaps this is violent enough to break these levels, and we're talking 20-year historical lows could be broken. This is a low around 6,500. We're trading around 6,590 right now. So could it go lower? Sure. Okay, we have 6,650 flash crash lows. Price has come below that. We have lows back in 2015 with an oil flash crash. This is August 24th, 2015. That was the bottom in oil at $22 a barrel. That was the top and bottoms on a lot of currency pairs that were commodity related. Now, the Swiss National Bank is known for intervention, but I don't know if it's going to be saving the Aussie Swiss as much as it would be saving something like Euro Swiss or Dollar Swiss. Now, granted, if Euro Swiss and Dollar Swiss start to show bottoms, Pound Swiss, same thing, then yes, the Swiss basket will get weaker. But right now, it is high volatility, flight to safety, and it is breaking some structure. So again, I am currently holding longs on the Aussie Swiss. I'm going to work my way through this, but I like the long-term aspect of it's not a high volatility currency pair. I like that it gets some positive rollover. There's some big levels up above. But again, it would be silly for me just to hang on to this. My goal is to try to grab, if I can grab a net 50 to 100 pips, I'll probably close out and then refresh. And I'll look at the perspective. I would like to be a buyer long-term from these areas. But if we just keep dropping, I have to consult the higher time frames. I have to look at my probabilities. I have to trade what is right in front of me. And right now, again, take a look. It just looks like we're just getting more and more momentum to the downside. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have 11 of 12 candles daily chart that are all bearish, right? So because we are coming back into major lows, I'm willing to give this a little bit of time, but any type of recovery that gets me into net profit, I will probably take those profits, limit some exposure, and look to trade elsewhere and just be safe rather than sorry on some of these risk-averse currency pairs, because the Swiss will get stronger during risk-off, so will the JPY. I'd rather be trading in that direction than against it. All right, but I do like where I'm at. If we see a big V bottom, and this is very true, that's what this looks like, is when we see price action so violently selling off. A lot of times what can happen is one little headline, one little correction, we might see aggressive sell-off, pausing during a dead zone, aggressive sell-off, pausing during a dead zone, aggressive sell-off. And again, I'm not counting these necessarily, but we just see a very long retracement, a very long correction. And it's so violent that it creates a V bottom, and that's actually a reversal pattern. All right, so we either see flags that we can trade to the downside, and we can have automated systems that run with these trends. And then if we see a V bottom, we might consider trading the other way with stops below the swing in the short term. All right, now we have to see that evidence for me to say, okay, let's hang on to the buy trades. Right now, let's try to get ourselves out of this, unscathed, grab some net profit, and we'll reassess. Right, we'll reassess. So alignment-wise, we have good bar counts. We have consecutive daily candles in a row, most likely leading to some type of correction. But look left on your charts. If we pull back, is this a level of resistance now? If we pull back, is this a level of resistance now? We'll have to wait and see. If it moves very slowly to the upside, that is probably a correction that will sell off again. Okay? So again, with this risk-off stuff, try not to fight it. We're trying to get back into some break-even levels or higher, make a few pips, and then reassess, clean up the margin, grab a few profits, and trade what we see. Aussie yen. So still selling off. We noted this one in the Flex trading room. We are breaking out here at 7,500. What a sneaky little breakout. We talked about this yellow boxes. Look, if we want to trade it, we've got to go with the flow. I thought we were going to see a bullish run on the JPY, meaning a weaker JPY and risk appetite because of what was happening with the Fed. The Fed disappointing the markets. Now, is it the Fed's fault that the market's dropping? No, this is really a long time coming. I think it just ignites the momentum, and now we have a just a renewed sense of volatility still in August, which is crazy to me, but it doesn't matter because it's right in front of our face. So big breakout here at 75. Take the breakout, and you are 300 pips in profit and then some. Flash crash lows from January 2nd. I would say if you're a bargain shopper, we do have an opportunity to look for this as a low, look for a V bottom with a tight stop. That is about the only way that I would be buying it, would be I'd look to buy, have a stop. If it reacts, great, grab some pips. If it's a V bottom, then maybe you get a reversal pattern there. But right now, if you have a pause or a flag, that probably has one more leg to go lower into this flash crash low and possibly even deeper. All right, so if you are looking to participate with JPY strength or Swiss franc strength, it is best to be trading structure from a 1 hour chart or less, because that way if something happens where the structure changes going from a sell zone or strengthen the JPY, strengthen the Swiss franc into a V bottom or reversal pattern, a 1 hour chart is going to allow you to see that structure pretty cleanly and get into trades with directions, whether it's indicators or some type of price pattern. You'll see that a lot quicker than on a higher time frame. So I'm watching the 1 hour charts looking for flag patterns to trade. You can see what they look like because that's all that's been happening here. Okay, once we broke out, this was the break of the yellow box. Break, retest, literally to the pip, rejection, and it goes. There's a flag, goes again. This is somewhat of a flag, but you really see how aggressive this has been. This is just pausing and going. Pause. So we have a flag right now, right? We can see this last little leg. We're pulling back. That's a little flag. If this just stays sideways, look for another push lower. So if you want to scalp it, there's the structure. All of your trending systems are likely showing sell zones. If you're using courses like I have, Right Trader, Six Figure Max, Amplifier, even the Perfect Storm Trend Zone or the Trend Storm, right? That's showing that we're in the sell zone. So you can stay with those alignments. I like Right Trader because you have some nice dynamic ribbons to sell from. So this is Aussie Yen on the daily. Let me switch this over. This should be a smaller time frame. You'll see a nice 1 hour setup here. Okay, it's been pretty extreme. The 1 hour chart most likely will pull back into the blue area. That's going to be resistance for another sell trade. Stop area can go up above the red ribbon. That should be a trade that just comes out, balances the trend, pushes lower. That's a scalping opportunity for the Aussie Yen and a lot of these yen pairs and these Swiss pairs. So if you have Right Trader, that's a nice way to trade some dynamic resistance. Take a sell trade that's pretty tight stop area wise. Either stop area above the shaded zone or stop area in here, making sure that the ribbons are going to hold resistance, turn back to red, and then sell that and stay with it. So you can do this on literally any JPY pair or any Swiss franc pair at this time. Aussie New Zealand, we're at 103.66. I'm going to go to a higher time frame. This one I still have a long-term outlook with, and I am long-term bullish. It's just taking its time. It might come all the way back down and retest 102.75. All right, it might be a fake out where it comes down to test that low, maybe even test this low, the flash crash low. But long-term, I'm still looking bullish on the Aussie New Zealand. I'm hoping we get to 108 or higher on this currency pair, but it's going to take some time. We'll figure it out. I'm staying patient on this one. I do have some built-up positions. Aussie dollar, still pretty amazing that we have so many daily candles in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is 12 daily candles in a row. Now, there is a pivot alignment here that is something I haven't seen in literally all of my years of trading. Now, I've seen multiple pivots missed in a row, but there are 5 consecutive pivots that we can see here. They're daily pivots, and the most recent pivot that was still missed was 69.21. I'll show you right here on the chart. Here is a daily pivot. Okay, so if you can see these, 1, 2, 3, 4, 5, right there at 69.20, and then we've hit every pivot since except for this one. It looks like it was just missed on Friday of last week during non-farm. But I am holding some small positions, but I'm holding some longs on the Aussie dollar. Granted, we are not on the right side of the trend line. Granted, I'm fighting this flow, but probability-wise, I'm willing to hang on to this one at current levels, expecting some dollar weakness, and hopefully we see a recovery on the Aussie, stability in the Aussie with still a weaker dollar, and 69.21 is an easy profit target. Hopefully more comes from that. But I would take some positions and gladly take 69.21 at this time. We've got other dollar pairs that are doing just fine. But that's what I'm looking at. I know that in the longer term, here's the weekly chart. Let me get rid of that daily pivot again. Here's the weekly chart. We're back down towards flash crash lows of January. We're back down towards lows in 2015. These are big levels. Now, could it go lower? Sure, I guess. How much lower? We have to look all the way back to 2008 to see the last time that this Aussie dollar was this low. So based on what I see technically and structurally, I'd like to see a bottom at any point. We certainly need to have some type of resolution or optimism, anything that's going to let this Aussie recover on some type of lighter U.S. and China trade war concerns. But that hasn't happened yet. We have, like I said, I believe 10 plus days that are all bearish right now. I think more than that actually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yikes. That's a lot in a row, right? So do we expect a pullback? Sure. We have support right there. We have support right there. That could be short-term resistance around 68.60. I love that pivot alignment. I would love to get back towards that pivot take some profit, and then again, be neutral. Grab some profit. If it wants to go higher, I can participate. If it wants to sell off again, I can participate. But I'm trying to get back based on the probabilities of that pivot getting hit. All right, CAD Swiss, 7366. Actually, we moved down our trade. This is, again, the Flex Trading Room. We bought this thing nice and low at 7370. I am okay with this trade. This is 3 straight days of selling. Could it get uglier? Yes, possibly. But what tends to happen on a currency pair like this is as it goes up aggressively, it tends to fall back down. As it tends to go up aggressively, it tends to fall back down. So as it is falling now aggressively, I'm looking for either this level or this level or this level to allow this to start going back up. I think overall this is still in a range from 76 to worst case around 71.55. So I'm still looking to be long on CAD Swiss. I actually bought it right there. If we come back up, I'd like to target 7,600. If we go lower, I'll just wait for divergence. I'll look for trendline breaks and falling wedges and good patterns like that to buy from, and then work our way back to 76. So overall, I do like this trade to the upside, just staying small and working through a position there. CAD Yen. Yen pairs, you know the story. Sell them. We're coming into support unless you see a V bottom. This is sell, sell, sell. Next big level is going to be all the way down here where the flash crash was in January. Okay, so that's a real valid level based on your broker. You know, I would say if you have different broker feeds, look for the more conservative. There might be one that might be 100 pips lower, but go for the most conservative one. Why? Because that's an easy level for price to get to. It might just be coming after this. You know, and what's silly to me is that I said within the first 2 weeks of trading this year in 2019 that these flash crash lows should look to be revisited. And why did it take 8 months to do it? I don't know, but here we are staring it right in the face. So unless it stalls right here and bounces right here, this could be the sign of a V bottom. This could be the area for a V bottom, but if it breaks through it, look for flags, sell, 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 sell. You've got a target down there at the flash crash low. If we have a V bottom, again, look for the price evidence on a 1 hour chart. It's going to be aggressive. You can take that back up. You're going to have a distinct stop loss right below that lower, that V bottom. Right? Don't trade these yen pairs, especially yen pairs without a stop loss. Swiss yen. This one is strong versus strong. I would leave this one alone right now. Euro Aussie. I did have a position for us at 62.30. It's a sell trade, and this thing is getting crushed to the upside. Now, again, I'm willing just to hang on for a little bit longer. You know, we'll have some live sessions this week in my Flex Trading Room. What am I going to do here? Well, we're going to talk about this one. I'm not going to just feverishly add to this one. Clearly, we're upside down. It's blown through major resistance, major resistance. However, is this a retest of the flash crash high from January? Maybe. Are we overbought? Yes. Are we divergent? Yes, on multiple time frames. So again, management-wise, we have one position right here. If we look at selling this on Tuesday or look at a smaller time frame to get some type of price pattern, we can probably get ourselves back into profit here. And that also gets us out at resistance, resistance, resistance. And we don't have to hang on to this trade. We can reassess. If it's going to bounce from there, we can go long. If it's going to come back through and crash through, we can resell it. All right, but for right now, I'm just going to hang on, get a little bit of management trade, and maybe add one more position to work through it. But that's about it. That's about it on Euro Aussie. Euro CAD. I did close up some profit today on Euro CAD. We had a couple of buy trades in off of a few levels. We had one trade that was just around 4,800. I did take a small loss on that one. I believe we were in at 47.99. So 47.99 was just shy of a break even, but we had a nice buy trade in at the 127, and I added a position just off that break. So overall, it was net positive. I just wanted to close it up. It's coming back into that zone where I was highlighting protect profits on a correction. So we have a high today of 4783. I was saying protect profits between 4,800 and 4,850. So I was watching, right? I'm watching charts. I've got chart alarms going off. I came within 17 pips of my, target, so to speak. So I want to go ahead and protect those net positions. Overall, it was like 20 to 30 net pips, which isn't a lot, but it also cleans it up. Less trades and less drawdown to worry about. Grab a few net pips, on to the next trade. That's Euro CAD. Euro Swiss, 108.88. Let's talk about this Euro Swiss. Now, longer term, I think this still remains a bullish long-term trade. Okay, now it might not seem like it right now, but this is a bearish crown that has fulfilled, and even if we have a correction based on the new wave or the new Fibonacci zone, we should see a pullback into this yellow zone around 1150 or 1200. I would also like to think that this is still a correction against the longer term, which is 1, 2, 3, 4, and we start to have a fifth wave to the upside. If that's the case, this entire pattern would have to set up bullish, and we can then have a longer term trade setting up to go up. Now I know I have a bunch of junk on my charts, so let's look through that really quickly. But all I'm really looking for is a couple of patterns. We had a crown pattern right here that we were selling. We hit our target on the crown pattern. I'm now looking for something to give us the structure to buy it and look to stay long right back up where it started. This could overall just get back to 120. We might have a range. This looks like it's trying to come back into 10800, which is the gap from the French election back in April of 2017. This was the French election gap that was created on euro pairs over a weekend over the French election. So if we end up finding that level, I would look for that to become a bottom. There's probably some technical significance there. There certainly is. But I'd like to see if this Swiss franc stuff will start to weaken. And the Swiss National Bank does like to manipulate, which I would welcome that at any point right now. Pound pairs. Pound is still weak. The euro is still strong. Euro pound is up to some fresh highs, or trying to get there. Yep, we're at the fresh highs again, the 18127. Are we overbought? Are we divergent? Yes, on tons of time frames. We have 13 weekly candles in a row, which is ridiculous. Okay, weekly candles in a row. This is not correct. Hang on a second. There should not be any indecision here. In fact, let me show something. I'm going to go into my broker platform really quickly. So euro pound on a weekly chart. There. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks in a row. You serious? Yep, that's what's happening. So could we go up higher? Possibly. That would be just the relentless run, and then the balance starts from there. This pair, I strongly believe in this pair. I think it will come back. I think overall we have some type of potential broadening formation as well, or we have major support down here. This could be a long-term range. Another way to look at this would be something like this. We could just be in a large channel. Okay, if this is resistance, we hit channel highs, but respect what was resistance can become future support. So if we come back to these areas, that is right around 9,000. We're at 92 right now. If we come back to 9,000, we want to watch that level. If we come back any deeper than that, we want to be protecting profits. Okay, if we go up any higher, how much higher can we go? Probably 94-ish before we start balancing that move out. So if you're going to ride this one out, that's what I'm looking at in the distant future. It's not that far away. The pound has been weak. It seems relentless. 14 weekly candles in a row is insane. But we're looking at insanity right now. I mean, there's not a lot of things that make sense. There's a lot of irrational movement, and the market is just on a new, renewed volatility kick. So we're moving, and we're moving aggressively. So I know if traders aren't positioned accordingly or have trades that are small enough, it is difficult to manage things right now. That is my euro pound. Let's go on euro yen. It's just like the other yen pairs. If you're in a 1 hour chart or smaller, sell it, stay with it. Short term, unless you see that V bottom. What do we have in the larger time frame? Let me delete this, go back to the daily. You can see a larger channel. Let me get rid of the pivot as well. Okay, so longer term channel. Could we come down lower? Big yellow box. It has been hit. This was a pocket I noted. This is back in 2017. Again, April French election gap. Filled. Could it go lower? Sure. Where to? How about support, support, and support? This could get us down into possibly 115. I would look left over here. In fact, let me get a crosshair tool and figure that out. That low is around 114.76, just off the 115 handle. Could we come down to there and drop another 370 pips? Possibly with bear flags, unless you see a V bottom. All right, so I'm telling you, don't just get complacent thinking that the JPY is going to stay strong. It goes super aggressive and forces traders to chase it, and then it V-bottoms and it reverses. So if you're staying with the strength, use 1 hour structure or less. All right, use systems, use robots, sell it, stay with it. That's great. If it keeps going, keep profiting. But if you see a V-bottom, there's some structure. Look left on the chart. It's probably going to be a pause or hesitation or a V-bottom. There's plenty of inefficiencies above for reversals. If I'm looking for a catalyst on why we'd have a V-bottom, we can look no further than the news. What's going to happen? What's going to drive it? Something from the Fed, something from President Trump, something from the U.S. and China. It won't take much to stop the bleeding here, but something needs to step in if we're going to see it. Otherwise, stay with what you see, which is JPY strength. Same thing with Swiss franc. Euro New Zealand. This one also got blown up a little bit through the highs that we were expecting. Overall, this is still a large wedge with a topping pattern here around 78.80. Down, this should still find a lot of resistance around 72.50. All right, we have multiple candles in a row that are all bullish, consecutive bullish candles. We are overbought, which I like. We are divergent on multiple time frames, which I like. I am looking for another sign to get some type of exhaustion pattern, possibly running back up into these highs again, and then look for a sell trade. Right? Where I would get out of this trade is if we end up invalidating these highs, then I wouldn't want to really hang on to this Euro New Zealand too much longer. Otherwise, this should still be a technical sell trade down towards 6,400. Euro dollar. We caught a nice trade at 10.30, and that is the bottom, which is pretty awesome that we got that trade. It was a nice little weekly level and daily level we were watching. We had that trade set up months in advance. The low is 10.26. We got filled at 10.30. So how about that? Now, what are we looking for in this one? Well, I would love to see this, which just recently took out some highs. If we go from low, high, pullback, I'd love to see another push to the upside. We still have an earlier entry and a small entry around 13.20. If we get back towards 13.20, we can close this one up for break even or better. We can try to get it back to this high as well to take a few dollars, but we're going to run with a big position to the upside here. And of course, we're going to have to debate whether or not we stick this trade, stick it through, which is let's get to 1700 if we can. Are we going to see that much weakness out of the dollar? I would certainly hope so. All right, but it's going to be fast and furious if we get it. So if this bottom sticks and we start seeing more pushing to the upside, I would look for a 1, 2, 3, 4, 5 and see where that fifth wave gets us. If we have a 1, 2, 3 and we're back up towards this area, you can still participate in a fifth wave move, right? And see where that fifth wave gets us on the euro dollar. If we can clear 1400, from 1400 to 1700, it should be able to get there. But I'd say right now this recovery is from the lows, which we have a great entry with. If we go all the way back up towards these previous highs around 1400, we should be doing something with those profits, all right? Because we can always get back in and find a way to participate further towards 1700, all right? So I just want to make sure that we're protecting some profits since we have a good entry, and let's make sure we're not giving it back. But if we can get back towards 1300, 1320, anything above those levels, it's a nice spot to be protecting some profit. Pound pairs. Pound pairs have some pretty incredible alignments. Pound Aussie is, I'd say, pretty flaky for right now because we have weaker pound and a weaker Aussie. I would say if you're scalping, there's some volatility, but it is noisy. I did actually prescribe to some traders the daily breakout or the London daybreak strategy, which is looking at a candle from 3 a.m. to 4 a.m. Eastern time, which is the London session open, and just trading above or below. That way you have an exit strategy if something goes wrong. That way if you have the momentum moving directly in the favor of a breakout, you can take some profits on the day. But you can see that, what happened last week on Monday. That was Monday. And then it spent the rest of the week coming back and balancing. All right, now we have balanced this out. Is it going to be choppy? Possibly. We can come up here. We can set up a structure and then still sell off. Still have some type of range trading going on. So are the pound pairs easy to trade right now? Not necessarily. Pound Aussie, for me, I'm going to stay out of this one. But there's a lot of volatility for those of you that are liking the daybreak strategy, looking at for some scalping opportunity. But I personally don't love the pound Aussie. It's weak versus weak, which is tough to trade right now. Pound CAD. This one, I'm still looking at a really nice setup on Right Trader, but nothing is happening. Again, weaker pound, weaker CAD. Commodities are getting weaker. So is the pound. This is not going anywhere. But what do I have for a setup? Here is my Right Trader chart. This is one of my strategies. And 4-hour chart has a great, ridiculous bar count. This is a corrective move. So 363 bars. Now, what am I watching for? I would love to see this use the right side of the trend line and shoot to the upside, find this red ribbon, find the shaded zone. From there, traders and myself will be assessing our profit and loss. If I am still negative, I have one position in, one position in. This would be a loss. This would be a loss. This one would be break even. I don't care if I walk away with $0. I don't care if I walk away with a small loss or a small win. If I get back to this area, I will look at my profit and loss and make a decision. What I would hope for is if we have a nice push to the upside, that would be wave 1, 2, 3. If we have a corrective wave movement, whenever this third wave is complete, I want to be exiting with profit. It should be a net positive position. But if we have a 1, 2, 3, and we come back into this red zone, or this shaded zone, I will probably get out of this trade and just take my medicine. If it's a small loss, fine, I'll suck it up. If it's a win, great, I'll walk away. All right, but that's what I'm watching on this pound CAD. The same thing is true on the pound Swiss, which has dropped through 1.20, which is a crazy round number. Pretty shocking that we are at the levels that we are, but again, the bar count holds true. There's our bar count right there at 368 bars. If we go down to the candlesticks only, what I'm also watching for is, do we have a U-turn? This is a sentiment strength line. This is a measurement of price confirmation and momentum. We do not have a U-turn yet. There's nothing to buy. If we look left on a huge time frame like the weekly, how much lower can it go? Let me delete my pivots here. How much lower can it go? This goes back to 2016's flash crash low. We're right there just off that at 1750. We're currently trading at 1828. Could that be a nice V bottom if you looked left? Could that be a nice indecision bottom if we looked left? Sure. How are we doing on candlesticks? Take a look at the charts again. Euro pound, pound Swiss. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 12 out of 14 bearish. Okay. As far as a wave pattern goes, wouldn't you think that this movement that has been a falling knife eventually will find some type of bottom and eventually start making some... I'm not asking for it to do much. I'm currently long at some really nice levels like 22 and 2000. But if it drops a little bit lower and a correction happens, I want to make sure that I'm able to grab some profit here. So I am going to sit through this one a little bit longer. I know that it seems relentless right now, but so is the Euro pound. I'm watching the levels. I'm watching the candlestick counts. And again, there's a saying that the market can remain irrational longer than traders can stay solvent. But this is why I practice good equity management and trade super small, even for a fairly large account. I'm trading, small trade sizes. And my break even is, let me check my price. Pound Swiss, my break even is at 2100. So is it upside down? Yes. Is it fun to be in a drawdown? No. But am I worried about the trade? Not really. It's less than 1%. So I can weather the storm for right now. But I've got some big levels that I want to buy the time to see a reaction. If I get a reaction from this low or from this low, then I will hold and get my way back into profit. Otherwise, I'm just hanging out and I'll figure out how to cut my losses. And I will at some point, right? But I'm watching. That's pound Swiss. Pound yen. Stay with it, sell it short term. Pound Swiss, pound yen. If you can sell it, sell the flag, stay with it. If it's a V bottom, that's probably a reversal pattern in the short term. Pound New Zealand. It's weak versus weak. Stay out of this one for right now. Pound dollar. The dollar is a little bit softer. Okay, we're at 21.39. The pound is weaker, so is the dollar. 2000 is a significant round number for the US dollar, or for the pound US dollar. We are coming back in towards flash crash levels in October 2016. That was right around 1985. Again, just around the 2000 round number. So I'm currently holding a couple small positions that are long. What would I like to see this do? I'd like to see this indecision create a little correction back towards 2750. 2700 to 2750, if we correct there, that's a great profit level. Get out of all trades. If it sets up for a bullish trade, then that's our correction. There's bullish. If it sets up for a corrective move and then falls from there, fine. But if we get to 2700 or 2750, that's a great spot to exit. And you might think, well, how is that going to happen? A weaker dollar. If a weaker US dollar happens, Euro dollar continues to rally, pound dollar will rally, Aussie dollar recovers, New Zealand dollar recovers, the dollar itself, which hasn't fallen in over a year, could finally start seeing some signs and evidence of a drop. And we're getting there just in a little bit. New Zealand CAD, 86.23. I would still like to sell the New Zealand CAD. I'm hoping that we have more range-bound trading here that gives us an opportunity to sell it. And that would be this. If we have support, we come back up for one more test of 8,900, look to sell it. There's a long channel to the downside. So we could have support as far down as 8,300. It might still stay there, but that's probably going to offer a strong bounce. So if you're selling this right now, be careful. We could bounce and come back up towards 88 or 89 and just stay range bound if it keeps leaking lower, 8,350 to 8,300. That would be my, kind of medium-term outlook. It's not a fast-moving pair, but it's still trend-friendly if it's going there. But I would be, trying to sell this safely but then also be interested in buying those lows and buying those dips around 83. New Zealand Swiss. This one has played a little number on me. I'm actually sitting in the red. I was up about 180 pips in this trade and let it come back. Now, that's my fault, but I was also going after bigger wins. So we did take a 311 pip profit. We took 3 of 4 positions off the table with those wins, and now we're sitting back around break even. I'm going to leave this trade in at 63.34. It hasn't been filled yet, but again, look at the weekly chart. Weekly chart, look at the structure. Let me connect the lows. If we have a channel low, I'll buy it from there. If we have this level that I just circled, that support holds, that'd be the same as the New Zealand versus the Euro. If Euro New Zealand drops, New Zealand Swiss rallies. So we still have some levels on New Zealand Swiss and Euro New Zealand that should fall. New Zealand Swiss should rally. The hard part is with risk aversion, this one might remain a little bit odd. But again, long term, we have 20-year lows right there that have been bounced off 3 times in 20 years. It's significant. Could it go lower? Sure. But honestly, I'm just going to hold it and kind of work my way through it. It's a small position. It pays positive rollover, and the Swiss likes to intervene when it's kind of necessary. I tend to look at the Euro Swiss for some key levels because once they start intervening, the entire Swiss basket will weaken up. New Zealand Yen, we broke through 70. Now, this is critical. We talked about this last week in my trading room. Are we coming into a renewed open sell zone? Is this open season for bears? Maybe. If we break that level, we've got to consider selling, retracing, and then looking for more downside. If we have a V bottom, what better spot to get it than right there for this to be a fake out? Resistance, 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 that could certainly be support. But if we end up crashing through this level, crash, come back and retest, I'd look to sell this. There's a lot of room right there in that range. That is from roughly 7,000 to, that's a 1,000 pip range right there. Could we get it? Sure. Is it going to happen, overnight? No, but it's going to be fast if it's going bearish. If the yen is going to stay strong, it's going to be fast. We're going to have a lot of volatility on the yen. New Zealand dollar, I would stay out of this one for right now. So we have some intermediate levels that I'm interested in. I would watch for this low as well. But with everything happening with the U.S. and China, until there's some more optimism or a substantially weaker U.S. dollar that gives the Aussie and the New Zealand the upper hand, I would not jump in and do anything with this New Zealand dollar. Dollar CAD, 32.04. Traders were long with me on this one around 3,100. We grabbed a few profits. It was a slow mover, and it still is. I would still like to see a weaker dollar come from this, but oil has been dropping, and so that has translated into a weaker CAD. So right now, I'm just waiting for a better sign to sell the dollar CAD. I would like to sell it right around this resistance zone. You see that yellow box? It's right around, my price feed looks a little bit funny. Here's the daily chart. So it's right there around 3,300. We have highs around 3,250, 3,260. I'm looking for a nice clean trend line break on the daily chart. If we get it, look for some indecision here. Stop losses above, and I like selling the dollar CAD back to the downside. Dollar Swiss. If the dollar Swiss continues to drop, then that means the euro dollar continues to go up. This is a win-win for us because if euro dollar drops, if dollar Swiss drops, that means euro dollar rallies. I would love for this to drop, and that means our rally on the euro dollar continues. Now, long term, I'm still going to buy the dollar Swiss. It's positive rollover with one of the biggest disparities in the market as far as central bank rates go. Also on the intervention front, there's a lot of ways that the Swiss National Bank will tend to step in. So where would those levels be? Probably here around 95.50, probably here around 9200. Those big levels from there, we could have just a big range on the dollar Swiss where the banks play the game of major structure. And if we buy low and sell high, I think we can make some nice money on this dollar Swiss as well as hold some positive rollover. Dollar yen, 10500 is a critical level. We can see that from the breakout in 2016, that was the presidential election 2016 in November. Breakout, came all the way back to retest exactly where it broke out. Support at 105, support at 105. If we come back there again, watch for support at 105. If you're looking for V bottoms, what better spot to get a V bottom than a 105 with strong levels of support? So that's what I'm looking for there on the dollar yen. Again, if it crashes through 105, be on the lookout for this support level breaking. Any break, any pullback, stay with it. 100 is parity for the dollar yen. And again, major level there. BOJ might start to speak up at that time. There's a lot of things that could happen, but if we just have full on risk off, this is in free fall. But 105 right now is the line in the sand. Again, watching for V bottoms if we get them. So that's what traders will be watching with me this week is we're all aboard selling yen, selling Swiss franc because they're strong and it's risk aversion. But be cautiously watching for a V-bottom because it can change overnight. It can change in a day. It can change in a couple of hours. And if we see that evidence, we want to make sure we're not forcing sell trades and we're not reacting to what's been happening because if we're late, we're late, right? If we missed out on the trades, we missed out on risk aversion since last week, who cares? Let's go find another trade and let's trade what we see, all right? But I'm saying if we can stay with the confirmation and stay with the sell zones, excellent, let's do that. But if we have V-bottoms, I need to respect that as well. Dollar peso. If anybody stuck through the peso, we came back and found that yellow box that we had noted. Here's the daily chart. We had a pocket around 19.5 and boom, hit. I did not hold this trade. The reason why is I was up about 200 pips going through the news last week, and I went ahead and protected that area. Took 3 more days to get there between Thursday, Friday, and today, but that yellow box was hit. So if anybody's still holding, that's a fun little trade in the peso, probably worth about 3,000 to 4,000 pips. So if anybody grabbed those pips, congratulations. It didn't really give us much trouble. I just didn't hold on to it long enough. Now I'm watching this level. Now I'm watching possibly this level. I will still sell this dollar peso. I need something better. You know, I've been really surprised with how stagnant and sloppy the peso has been, even though it's really been range bound and we can trade the ranges. But if we get a big opportunity to sell, that would be pretty nice. So that's what I'm watching on the peso. Krone, we're just going to leave that one alone for now. Dollar index, this is important. All right, what do we have here on the dollar index? Nice little topping pattern from last week. I also looked at the weekly chart, how we closed. Let me see here. That's my broker platform. Yeah, that's fine. Let's just stick to the daily chart. So nice little indecision candle and a couple of bears. Now, what do we also have on my sentiment strength line? This is an 8-hour sentiment strength line chart. That U-turn to me is significant. If we hold this top and we hold this U-turn, we should be looking for some bearishness to the downside. The only way this is going to turn green is if price comes all the way back up and takes out the high. But currently we have 1, 2, 3 lines. So this is my stop area according to the dollar, and we should see a weaker US dollar coming in. I would love to see the dollar take out these levels. This is what allows the euro dollar to keep going, the Aussie dollar to recover hopefully, the New Zealand dollar to recover, the dollar CAD to drop, the pound dollar to recover. I mean, if this alignment holds, there's a lot of great trades with dollar weakness that we can make a lot of profit on. You know, and like I said at the very beginning of this this session, if we have profits and we have positions that are not looking too good, take those profits. I know it's not fun to take profits and wash away bad trades, but you will thank yourself in the long run from letting a bad trade not get any worse. If you just have the ability to take profits and cut off bad trades, do it. Okay, but we have good positions, and I certainly hope the dollar cooperates for us to have a lot of profit, and we can take a look at some of the pound pairs, maybe some of the Aussie pairs, and figure out whether or not we want to close out and skim some of those losses off the table. All right, but if the dollar stays, awesome. Let's go. Let's go and drop a ton. There is a lot of momentum here that hopefully is setting up and ready to build and ready to drop officially. And what would that look like? Well, according to this daily chart, I would love to see red all the way down to this yellow box low around 12,243. If we take out that low, probably a little pullback, probably another push, and then we'll come back up here again and then look for a fall. But it should be coming in towards the yearly pivot around 12,032. So I do have a plan to sell the dollar index. I'm really, if I can, just get a nice wave pattern. If this is 1, 2, 3, I'll look at that as a wave pattern. If it's 1, 2, 3, 4, 5, I'll look at that as a wave pattern. But I want to see something meaningful and corrective on the dollar that allows us to grab some nice profit out of it. Oil, still in a wedge. Okay, still in a wedge. What's oil's next move? I don't know yet, but there's a ton of support on this wedge. There's a ton of resistance. What's interesting, we actually called this wedge, well, initially we called it right here. Once we had the high at 66 and it started to drop, I connected the highs, started to look at support. I mean, we have these highs, this low is already in place. So we started looking at some Fibonacci numbers, some retracement numbers, and there's something magical about the 70%. This high to low was a 70% retracement. So this low to high, about a 70% retracement. So there's something about that anatomy of a wedge that forms, and we've been spot on with this, which is pretty cool. So anyway, what's the next move? We've got to break out. Some way, shape, or form, are we going down? Are we going up? There's tensions in the Middle East, but price is still solid for right now, at least sideways. But I would say, keep an eye on your price structure. There is a low, there is a low. this does look like a potential bear pattern that once we get a break, look for more selling in oil. So if we break these levels, again, it's pausing right now. If we break these lows, this bearish momentum in this wedge break will probably come back and retest the lows around $43 or $42. So be on the lookout for that if we break the lows. Otherwise, I would not do much with oil in here. All right, other than buy it low and put a stop loss, sell it high and put a stop loss because it's range bound. But again, when these get coiled, ultimately they're going to make a decision, and it's more profitable to follow that bigger decision. Gold and silver. Silver up to 1631. You can see the indecision that's forming. This actually looks really promising. If we stay here for indecision, we should have more upside coming. I like that this is pausing. It shows me that the bulls still want more, and there's more room to go. So watch for this indecision. Hopefully a weaker dollar is the byproduct and the driving factor behind silver going higher. Gold, same thing. Gold is at 1460. I believe we're at new highs. Yep. So gold is up towards 1460 high, new high on the day. We have room towards 1500 plus. So gold and silver look good to the upside to stay long. The weaker dollar also shedding some light in some Bitcoin flow. Bitcoin having a nice run here. Look at this on the daily. 4 or 5 days in a row of bullishness. We still have a corrective channel, so be on the lookout for resistance to possibly push it back down. But if we see another renewed sense of buying and we break 12,000s, then we might be able to see some new highs here in the crypto world. So that can make a lot of crypto investors pretty happy. Hopefully the whole portfolio will follow. Ripple came off of lows around 30 cents. And I actually added some positions there at 30 cents, but Ripple's back up to 33. So this is just the daily chart. We had levels around 28 cents. Wow, not too bad. That's a decent little move. Now you look at this, you're like, well, that's nothing. But again, long term, if you built a base around 30 cents and this thing goes to $1, that's pretty awesome. If it gets back to the 2017 highs above $3, I mean, come on. It's 10 times your money. So food for thought. One more thing before we go. I know this video has been pretty long. I appreciate everybody watching. I just want to make sure that I covered a little bit of everything from the news and what's happening in the stock market, what's happening since last week with risk off, to the calendar for this week. It's actually a lighter calendar. Big news this week. We have New Zealand employment on Monday night. That's going to be 6:45. We have an Aussie cash rate decision expected to remain the same at 1%. We have an NZD expecting to cut rates at 1.25. Ooh, baby, if they cut rates, Aussie, New Zealand, let's go. Let's go to 108. Let's go to 109. Aussie dropping rates. They cut from 1.5 to 1.25 to 1%. New Zealand went from 1.75 to 1.5. Let's cut to 1.25. Let's go. Come on, Aussie, New Zealand. I don't care what happens on the pound pairs. If I make money on the Aussie, New Zealand, my year is done in a good way. So this is big news for the week. Aussie Governor Lowe speaking monetary policy. It's really all focused on the Aussie, New Zealand, which is crazy considering how much turmoil they've seen in the last 72 hours. And then pound on Friday to wrap up the week, and CAD employment, which it didn't happen last week when we had U.S. non-farm. We have it this week on Friday. So it's going to be a busy week. All eyes on Aussie, all eyes on New Zealand. Let's see how everything shakes out. Keep an eye on those JPYs and Swiss francs. Watch for those V bottoms. Just be on the lookout for them. But right now, the flavor is risk off. The flavor is sell. And the market is in a bit of a panic. So if you are ready for this, okay, if you're ready for this, if you were looking at this chart, every time we've seen tariffs, it has been a sell-off. It has led to a sell-off. So there is room to drop. That is for sure, especially with a broadening formation. It is scary how much this market could fall. The real question is, will these central banks let it fall? Will the geopolitics let it fall? Will the powers that really make the market go around, will it let it fall? Will they let it fall? I don't know. Maybe. Amazing things can happen from dust. So if they let the whole market burn and give back 25, 26%, well, everybody that survives is going to have an amazing buying opportunity. But it is going to be one of the largest losses of wealth that we have seen, because you're talking about years of growth, years of this is the best market ever. Look at how easy this is, to wiping it away within 3 to 6 months, right? I mean, that's how ugly and violent this could get. So part of me thinks it's not going to be this way. Part of me thinks that I would be on the lookout for some type of pausing, right? But don't get complacent. We had pausing there and it dropped another 10 to 15%. We could have pausing there, it could drop another 15 to 20%. All right. But if we see a V bottom, we might still be able to thwart the drop. And it's just, hey, well, let's go up to the highs again. Who knows? But let's be ready for it. All right, so everybody with me this week. We're going to have a great session in the Flex Trading Room Tuesday, Wednesday, Thursday. Look for the alignments, look for the doc updates. If you have any questions, reach out to me, cpulver@markettraders.com. Let's have a good week, everybody. Talk to you soon. Bye.